All right, so good evening, everybody, and thank you for all of you who attended last night's money mindset and money management session. We are going to cover credit tonight in a lot of detail. So I hope you all have brought some questions for me, and I would say feel free to ask anything and everything. I always say this is a safe space. Like let's be open. Let's be willing to have that discussion. There's probably a question that you're like, I don't want to ask it. Just know somebody else might also have had that same question. And so just feel free, again, if you need to take yourself off mute, if you want to hit like the hand sign to raise your hand, we'll acknowledge that. Like Simone mentioned, we can leverage the chat. So in case you don't want to speak, to the group, feel free to leverage the chat. And I'll try to pause throughout just to see if there are any questions that I might have missed kind of once I get into the material. Sometimes I just kind of get going, but I got Simone and Charlie there to kind of help me manage the chat. And I was going to mention something else. Actually, I'm going to, before I hop into my presentation deck tonight, let's see. I think since I'm in control of this time, I can launch this poll. Let me see. Or actually, let's see.
Do you see the polls?
I do. Credit building.
Mm-hmm.
Yep, I got them. All right, so let me see. Can I? All right. So we'll kick off tonight again, just like we did last night, with a couple of poll questions to kind of help set the stage. So take a few moments here, and I'll give it a couple of minutes here just so we can kind of get through these questions. And yeah, we'll talk about them briefly, and then I'll hop into my presentation. Just take a moment here and answer the poll questions. And if anybody can't see the poll questions, please let me know, but the poll is up and live at this moment. All right. All right, good. We got just about the whole group. I'll probably run the poll for about another minute, and then I'll end it, and we'll talk briefly about these before we hop into the material.
Jasper, I sent you a message.
Okay. All right. All right, looks like we're about good to go. I'm gonna go ahead and I will end the poll. All right, give me a second here to end it. All right, so I'll share the results here with the group. All right, so I would say my credit is, so we've got, okay, majority says okay, we got a few excellent. So for all my excellent credit people, feel free to chime in, because that means you're doing something right. You're hip to the game. So if you got some good pointers on how you've been able to maintain your excellent credit, I would love to welcome any comments, or as I go through the material, if you've heard something different, I'm always welcoming more information that can help the group. Okay, the majority, okay, credit. Okay, I got you. Could use a boost. Yeah, we're here. We're going to talk about it. We'll talk about a few things we can do. The next one was dealing with, I need to be concerned about my credit report or score from. The majority, you got this one right. It's all three of the credit agencies. And we'll talk a little bit about this a little bit more in detail as we jump in. But yes, all three credit agencies are important. And number three, I must apply for a credit card to start building or to rebuild my credit. Yeah, the majority, you got this one too. That is actually false. And so I'll share a couple of resources, and I'll say ideas of how you can begin your credit journey, or if you're looking to rebuild, or even if you need a boost, there's some things you can do that don't require you to actually get a credit card. And the reason I asked that question was because I've heard it too many times where people were telling me, I got to go get a credit card. Got to go get a credit card to start billing. I got to go to the store. And when they offer that, I was like, nope, no. That's an option, but that is not, it's not true. There are other ways you can begin the process. Hey, and really quick, Simone, it wouldn't let me save it, just so you know. It was going to have me to relaunch it, but the results are still up on there. So I can remake you the host, but yeah, I clicked the button, but it didn't.
It's okay. I took a picture of it, so you're good.
Okay. All right. All right. All right. So bear with me one moment, everybody. I'm going to get my presentation up and ready. All right. All right. All right, so hopefully everybody can see that should be the picture of my logo, the Build Wealth Movement. And if this is your first time joining us, I start off every session with kind of what my goal is. And this session will be no different. Again, it's going to be the same in every session that I do. So you'll see this again tomorrow for those who come back. But it's to change the way you think and feel about money in order for you to achieve financial peace of mind. So again, tonight, similar to last night, just like tomorrow, I want to work on changing the way we think about credit and how we manage it. Again, we may have some feelings or emotions towards our credit system. I harbor probably those same feelings, but how do we deal with some of those things and move forward? So think about that as we go through tonight's session, as we talk about credit. And again, if you've got some questions that are on your mind, feel free to throw those into the chat, or as we're going through it, again, if you've got a really good story that really applies to where we are in the presentation, like feel free to share that, because I know that sharing works. Like when people share those stories, some people don't take my word for it. Like, I don't believe them. Well, maybe there's others who can confirm what I'll share with you, but also may have benefited from some of the strategies that we'll talk about tonight. All right. And let's get into it. So having good credit is important. And I love a little levity. And so I found this meme. I found this a long time ago, but having bad credit is not a good thing. And I sometimes share that credit, having not knowing about your credit or having bad credit, it allows lenders to judge you. It tells a story about you, and you're not there to defend yourself. I think it's that latter part of not being able to defend yourself, because life has happened to a lot of us, but you still maybe see a report or a score, and then a lender is going to make an assessment about you. But again, you're not there to tell your story. So I don't like it, but this is the system we have to deal with. So having good credit is very, very important. If there's anybody that thinks otherwise, please let's change that way of thinking. People sometimes say, well, bad credit. I always think these commercials like, well, bad credit, no credit, you can still get approved. There's a lot of advertising that goes around that, but be very mindful of those types of organizations that are willing to help any and everybody, because the terms of what they're offering might not be in your best interest. And so again, they are pretty, I'll say, predatory, honestly. They are really working on trying to identify who needs that help. And some people just get so desperate that they'll do anything. So, credit, it's one of these things that you can mess it up, you can fix it, you can mess it up again, you can fix it, and you can keep doing that for the rest of your life. So I hope that after tonight, no matter where you are on your credit journey, that it gets to a point where it is okay, where it's good, whether it's on the up and up, and you maintain it. That's the key to this. And so depending on how credit was introduced to you, and I'll tell you the story for me in a moment here, like how that story is told really is indicative of how you may deal with credit today. And so I'll say that I was fortunate to have like a person close to me, my mom, who really broke down credit to me. And it was like a 10-minute conversation. 10-minute conversation. So I know we're going to speak longer than 10 minutes tonight, but when she broke it down, it just like made sense. All right. Like it just made sense. So before I hop into that story, like what is credit? Well, it's the ability of a customer to obtain goods and services before payment based on trust that the payment will be made in the future. That's all it is, y'all. Some people will be even shorter with the definition. It's other people's money. OPM. So I'm using somebody else's money to buy something, and they're trusting that I'm going to pay it back. So when I was 19, this is my credit story. I was in college. A lot of credit card offers would come my way in my campus mailbox. And so I was like, I'm gonna call somebody I know who's good with credit, who's got good, that good credit. So I called my mom and I asked her just like some basic questions around like, I know it's important. I know I'm gonna need it when I leave college, but like, can I start now? And she was like, yes, starting now will be helpful. And then she said, well, what else? Like, what else do you need to know that's going to help you to not mess this up? Because I need you to always have good credit. And so I kind of asked her about the interest rates. And so she kind of said to me, well, actually, hold that thought. Let me ask y'all this. Let's do a live experiment. And you can put your response in the chat. Let's do this live. So I was thinking about getting this credit card. I was 19 years old. What's the first thing you would have said for me to look at as I kind of made the decision on which credit card to get? Like, what would have been the first thing you would have told me? So if I was your son, your brother, cousin, whomever, and I said, hey, I'm going to get a credit card, what's the first thing you would tell me to look at? And you can throw your response into the chat. So we'll take on here. So again, I'm looking to get this credit card. So this is my story. I'm looking to get a credit card. What's the first thing y'all gonna tell me to look at? Okay. Let's see, we got interest rate. Okay. And what interest rate can you pay? Okay. Ah, it was invitation. Okay, I like this. Did you do the research on it? Okay. Ooh, we got a good mix. I like this. So this is good features. Okay. Yep. Annual fee. Okay. Yep. All right. Oh, this is good. All right. So I'm looking to get this new credit card. And the majority of people said the interest rate. I'll come back to y'all in a second. All right. So the other ones that were mentioned, in case everybody didn't read the chat, so we got, can I pay off, I guess, make the payments early, or did I get like an invitation or an offer? Did I research the benefits? Is there an annual fee? What type of features? If they can tell me what my limit might be. I don't know if they can sometimes do that before you apply, but I understand where you're coming from. So those are all the right answers. Now, the majority of people said interest rate. And so I did the same thing at 19. I said, hey, mom, I heard I need to be aware or mindful of the interest rate. And she was like, nope, you sure don't. The interest rate isn't important. I was like, what? But up until this point in my life, all I've ever heard is that, credit cards weren't talked about in a favorable manner. But my mom was like, the interest rate doesn't apply. I was like, please explain yourself. Because every time I've heard credit card, I've heard watch out for the interest. And so again, remember, I'm trying to change what we think about this stuff, right? So my mom said, if you use the credit card and pay off the bill in full every month, the interest rate will never apply to you. I was like, okay. But I was like, but what if the interest rate is like 1,000%? She was like, doesn't matter. As long as you buy something, pay it off in full, buy something again, pay it off in full, the interest rate will never apply to you. And I was like, so why do so many people say interest rate is the most important thing or the first thing? And she said, I think we're missing how the game works. And again, I'm 19, y'all. So I'm like, what? My mom is schooling. This all happens with like a 10-minute conversation. And so she says, if you think about it, banks and credit unions understand human behavior, and they know somebody's going to use a credit card for an emergency as opposed to having a savings account. So they're going to think emergency, use the card, but I can kind of float it. So they don't care about floating it because they got the emergency covered. But now that interest is going to kick in because they're only paying maybe the minimum or maybe not the full balance. And so my mom said, imagine if everybody just didn't overspend or didn't swipe that credit card and use money that they did not have to pay back. It clicked in my head. So when she said that, she was like, again, the interest only applies if you don't pay off the bill. And I said, all right. I said, all right, next question. I said, so I heard maxing out your credit card is bad. So how many of you, again, in the chat, just put a 1 if you think maxing out your credit card is bad. Just put a little 1 in the chat if you think it's bad. If you don't think it's bad, you don't have to respond. But if you think maxing out your credit card is bad, let me get a 1 in the chat. Throw a 1 in the chat. Keep in mind, y'all, this is 19-year-old Jasper asking his mother basic things about credit. Okay, so maxing out is bad. Okay, 1. Okay. All right. So let me tell you what Esther. Let's see. Anita ruined it for me. Darn it, Anita. All right, so Anita's right, y'all. It's only bad if you don't pay off the bill. You're honoring your contract. So again, we've been told that maxing out your credit card is bad. Yeah, if you don't pay it off. That's where it hurts you. That's where you're penalized by getting hit with interest. But if my credit limit, and my first credit limit was like $250, I was a college kid. So if I spent $250, paid it off, and kept doing that, they're just going to increase my limit. That's a good thing. Like, I love having access to more credit because I don't know what I'm going to need money for later. But my mom was like, there's nothing wrong with maxing out your card. I wouldn't recommend getting in the habit of doing that because maybe you're spending, again, y'all, we talked about money management last night. So maybe I need to kind of reassess some of my spending because I shouldn't be maxing it out. I shouldn't be getting that close to my limit if I can avoid it. But maxing out inherently is not a bad thing. It's only bad if you don't pay off that full amount next month. So my mom was like, Jasper, a credit card is a 30-day interest-free loan. And that stuck with me. Again, this is 19-year-old Jasper getting schooled by my mama. She was like, I know what they're going to tell you. I know what your friends going to say, what people are going to say. But she's like, I'm here to tell you, here's how the game works. I'm just letting y'all know. And again, y'all can ask these same questions of your family and friends. And just know there's only going to be a few people who are going to be right on point. And for those people, they understand the credit game. Now, I've got some pushback sometimes with the interest rate thing, but the interest rate, I said it's important for like big ticket purchase items, like a house, like a car, maybe like a student loan. And all those rates are usually low, but you know you're going to have that debt for quite a while because it's a large purchase. See, credit cards is just you. So the interest rate is only affecting those people who can't manage their money and spend wisely. That's the penalty you pay for not acting right. And the banks and credit unions understand human behavior, y'all. Banks and credit unions don't like people who pay off their bill on time. I mean, there are banks who probably make trillions of dollars a year just off of interest. And how do I know this? Because I saw a study. Saw a study. I think it was, I want to say it was Capital One, but it was some lady who had left Capital One and she just started like spilling the tea on what credit Capital One does. And they're not doing anything wrong. It's just they help a lot of people get credit cards to start out, but people just mismanage the credit. Like I literally could give this credit lesson and then issue credit cards and just, I bet you somebody will pay me interest. Although we just talked about how not to pay me interest because life is going to happen. And that's what they know. So they're willing to give people credit cards because the majority aren't going to pay off the bill in full every month. Again, y'all, I got this lesson at 19. I was blown away. My mom I hit her with every question. She was like, nope, wrong. But she always gave me the explanation. I challenged her because I was like, oh, I'm gonna go on the internet and see if my mom knows what she's talking about. And my mom's got great credit. But I was like, I'm not quite sure. I didn't fully grasp it. So if you don't fully grasp what I'm mentioning tonight, that's okay. Just you have time to go do your research. But for the wealthy people who know how to work this money system, oh, they understand interest rates. And the one on the credit card is not the one they're usually worried about. I'm just taking a look at Michelle's note here in the chat. Okay. Yeah, Michelle mentioned kind of student loans and those interests. Yeah, student loans they plague a lot of folks. And I think even if you're kind of juggling like student loans and credit cards and a mortgage and a car payment or car loan, I didn't go into a lot of detail last night about money management. Give me 1 second. Let me slide around. Change. Sun is getting in my eye. Give me 1 second, y'all. Let me make a quick move. Be right back. A lot better. So I was mentioning like prioritization of your debts. So I've run into this quite a bit where sometimes we're focused on paying down the wrong debt. So again, if I have the list of debts like the student loans, car loan, the mortgage, a credit card, like I still have a belief in trying to focus on the smallest debt and work my way up. But I know a lot of times people have a large credit card balance. And also I know that credit cards generally have the highest interest rates. So you kind of, if you've never done the activity of looking at your debts and just kind of taking inventory, then it'll be easier to kind of figure out which debt you should be attacking. But I've seen a lot of people focus on paying off the wrong debt. And it just, again, there's nothing wrong with paying off your debt. Just pay it off in the proper order. And I'll give you a quick example because there are, I have a lot of clients who have student loans and they're well over $100,000, and then they'll have a credit card balance of like 1,000 or two, like under $3,000. And so they may come into a windfall of money, get a bonus, work overtime, and then they'll tell me, well, Jasper, I'm focused on paying down the student loan. And I'm like, so the student loans are well over $100,000. And even if you put, let's say, the $3,000 down, okay, you're just under 100,000. You still got a long way to go. But when I think of these emotions and feelings of like dealing with money, what if you just paid off the credit card to have a $3,000 balance? That one goes to zero. That one goes off your list. That credit card I know has a higher interest rate than all the other debts you probably have. So I would encourage and challenge all of you to really think about taking inventory of all your various debts and really focus on attacking the proper debt, because all that's going to help your credit in the end, right? Paying things off, paying things down, it's going to help. But for some, they need that emotional kind of hit where if I can get one of these off my list, ooh, I'm going to feel so much better. I mean, I've done a lot of credit counseling, y'all. When you get that one or two credit cards paid off, I mean, you just start feeling better about the process. The debt's still there, but you start feeling better. That feeling carries over for months and years, and then a blink of an eye, debt gets missing. So, if you feel some kind of way about having debt, don't just know with a proper strategy and a plan, you'll feel so much better. Feel so much better. All right. So let's keep on moving. So here's the big three. They're all important. I've gotten arguments with people who were like, one's more important than the other. And I was like, look, Here's the reality of the three. You don't know who a lender is checking. That's why all three are important. Now, I've talked to some of my real estate friends. Generally, they do what's called a tri-merge. So they always look at all three. But for other things, they may look at one, two, maybe all three. You don't know. They're not going to call you and say, hey, I know you're about to apply for this card. We're going to check your TransUnion. Is everything okay on that report? Like, you're not getting that phone call. So I always recommend having an idea of what's going on at all three, because all three are important. And I'll never forget an experience when I applied for a credit card. I had that happen to me where I was looking to get a new credit card. I applied, and I'm one of those guys who, like, I read disclosures sometimes, not all the time, but a lot of times I've read disclosures. And in their disclosure, it said we were able to make a decision about your level of risk. Again, looking at my history, but we only look at your Equifax report. And I was like, good to know. And I don't know if that's their standard protocol. I don't know if it was that day of the week where I hit apply and then they check Equifax, but I would have never known that. So all three are important. All three. All three produce a score for you. And those scores will never be the same. If you ask me why, I do not know. But here's what I do know. If I were to ask three people on here to bake me a sweet potato pie, because I love sweet potato pie, I know I'm going to get three different pies from the three different people. Somebody's going to use a little more something than somebody else, right? You may have that special ingredient that makes your pie pop. And if anybody wants to bake these pies for me, I'll send you my information, or I'll come pick up the pies myself. I like sweet potato pie. But that's how this credit stuff is really figured out. Like, they all have a formula on how they compute your score. So if you've ever run some reports or gotten some scores from all three or two of them, they'll never match. Sometimes they're close, sometimes they are far off. But that's also why all three are important, because you need to know what's being reported about you before you go apply to something. And I think that's the part that I struggle with when I hear somebody say, yeah, I went to apply for this loan, man, but they said they found something on my report. And I always say, well, first of all, which report did they find something? Second of all, could we have been a little bit more proactive before you went to apply? That's all I want us to do. Just be in the know. Be in the know about what's being reported about you before you go apply. And we've got more than enough resources nowadays to actually have an idea. So I don't know if there's a really good excuse that anybody can give me as to why we can't know what's going on. But I'm open if you want to shoot that excuse over my way. But I think it's really hard nowadays to not get a little bit of information about yourself, because there's really been a lot of changes within the industry from a banking perspective or financial services to really, share this information. I'll be honest. I don't like the system, but it's the system we have. These three companies are extremely powerful. I mean, I joked one time when I was doing a session that talked about the credit score. We'll talk about that in a little bit. But I was like, I know the company that created the credit score. They're like a publicly traded company. And somebody was like, for real? I was like, yeah, the people who originally started the credit score. Y'all heard of FICO, right? Have y'all heard of FICO? FICO, Fair Isaac and Company. That's the people. That's the group that created the credit score. They are a publicly traded company. You can search if you want to take a quick second. You can search Fair Isaac and Company. You'll see they are a publicly traded company. I know this because I bought some stock in the company years ago. I believe it's so. Just a little fun fact that the people who make the credit score are actually a publicly traded company. These three are not. They're still privately held, so you can't own stock in these companies. But just remember, if anybody ever says one is more important than the other, all you say is that is wrong. All three are important. Unless you got some information where a lender is only going to use one report, then I'll have to eat those words. All right. So speaking of the score, here we are. So here's the scale. And I should probably say too, so FICO I just mentioned recently. FICO is the more popular score. There's also what's called a Vantage score, not as popular as FICO. I've heard Vantage. I know there are Vantage reports, and there's another. They have a different scoring. Their numbers are slightly different. I think it goes a little bit higher. More use FICO, so I tend to just focus on FICO for the sake of my sessions. And unless there's a day where Vantage becomes more of the big player in the credit scoring space. But if you're just looking at this chart, the higher the score, the better. I think we all kind of know that. I think, maintain for those who had mentioned in the poll where you were like, and I got excellent credit, great. How did you maintain it? Like, that's what I think a lot of people want to know. And I don't know if there's anything magical about how you maintain your excellent credit, because I don't think there's anything magical. I think people have learned how to do it, and it was easy to rinse and repeat that process. So me getting my credit schooling at 19, it's helped me to this day. My mom didn't make it complicated. She made it very easy for me I was 19 years old, I was able to digest it. And so my scores have always been excellent. So we'll pause it for a second. We'll start with Ms. Omawale, and we'll go to Daryl next.
Hi, I know that some banks use your FICO score or whatever score, probably FICO, but I also know that they use something called the DTI, the debt to income ratio.
Mm-hmm.
And can you say something about that, how it weighs against the score? If your score is in the 700s to 850, you should be fairly safe, but then the DTI on some banks and credit unions can kill you.
Well, okay, I'll say I'm not a banker, but with credit, the income matters a little bit when you do apply. So it is considered when you go, because you have to tell them how much you earn when you do when you apply for credit. So they're going to look at to see, okay, I'm gonna look at this report that I'm gonna pull. They will have some consideration how much that is applied to them saying yes or no to you. Again, I've never been a banker who's done that. Like, I just don't know that answer. It is a consideration is what I'll say. Because a lender wants to know, I mean, if you're gonna borrow money, do you have the income to pay me back? And that's why they look at the debt to see if you have a lot of it. Are you managing it appropriately? Mm-hmm. And then do you have that income to pay it back? Because in a lender's mind, so a lender is on banks, credit union, all they're thinking about is risk. Can I give you this money and will you pay me back? That's literally the question that can I trust this person? Because credit is about trust. Can I trust you? So yeah, they're gonna look at the debt levels, they're gonna look at your reports, also gonna consider your income when they're making that assessment. All right, Daryl, I'll slide it over to you. Daryl, go ahead.
Okay, I got some thoughts on this point, but I wanted to get yours so I can learn from you. And my thought is that yesterday's budgeting discussion is related to staying out of trouble on credit cards, because you need to budget to make sure that you pay off in full within the 30 days or the billing period, so that you can build scores on those credit cards that might have a higher interest rate. And I assume that budgeting ties to credit increases. Am I right?
Absolutely. Yes. But Darren, here's what I'll say. You know how many times I've tried to pitch doing the budget or money management before I've done credit or investments or retirement, and people are like, "Nah, we don't want to do that session." But you just said, like, it all flows up. We're doing this in order on purpose, y'all. Like, I think that people don't believe it. Like, yes, you need to understand the cash flow in your money so you can make these payments on time. Look, I understand if you get into a pinch in life and you only can make minimum payments. I get that. I've been there. But I don't need you to always stay there, because you're again, this story is being told about you. They don't get the details. Like, a lender is pulling a report. And they're literally just looking at some paper saying, no, yeah, no, no, no. And if you don't have enough like positive marks when they do that assessment of you, you're not getting the best rate. Like, I know we get stuck on the score. I mean, the score is just based off your report. And people don't look at their reports. It blows my mind. It's like, yes, I know the score is an easy, quick assessment, but the score is based off of these reports. So if somebody says their scores in the 500s or 4 or lower, I don't need to see a report. I just already know in my mind, we got some work to do. Because if you know that score, I know we got a ways ahead of us. You know, if your score is kind of hovering between like 6 and 7, okay, maybe there's some small things, or maybe you just haven't had enough time. So time is also a big factor with your credit. And we'll talk about that in a little bit, but like timing is big too. How long have you been in the system? I've got some, I got some family. They're a little old school. They live in cash. Oh, they love cash. I'm like, you can't do everything with cash. I mean, cash is still great, but if there's no record, I mean, how much cash you talking? And a lot of people don't have that kind of savings, or they don't have a business that's producing that income where they can pay for big ticket purchases with cash. So most people aren't going to save enough money or invest enough and wait a long time to buy a house. We're going to get that loan, put some money down, and then we'll pay it back over time. Like, that's the normal way life works. And there are people who pay for houses with cash, but everybody doesn't have that big cash. And sometimes it doesn't even make financial sense from a planning perspective to just use your cash when you could stretch something out for 30 years or 15 years. If your score isn't where you want it to be, just know you got a little bit of work to do. And I'm always going to say a little, y'all. We just got a little bit of work to do. We got to take a look, see what's going on. We got to look at all three of these credit agencies, credit bureaus, and we got to see what's going on. But this score, it's going to move a little bit. Maybe moves a lot of bit as you make moves in life. So I just showed this example as a way to kind of just solidify the point of why having a better credit score matters. So we all can get this sports car that you see here on the screen. We can all get that car with the colorful wheels. But you can see the difference of these credit scores. So we both take out the loan for 5 years for $10,000, but the 580 person is paying a whole lot more, 20% more in interest than the 670. And you can see the monthly payments. Not, that's substantial over a 5-year period. And then you see the final cost. So, I mean, if there was a third column of somebody who had like a 750, right? They're going to pay maybe an even lower interest rate. So the notion that you can't get stuff, we know that's not true. They'll sell you that car. That lender, that car salesperson wants to get you in that sports car. Just going to cost you a little bit more. So what's it worth to you if we could pay down some things, maybe wait a little while longer till we get the car? Like, I think we're so obsessed with instant gratification and getting things that we aren't willing to wait. Now, if you have to get the car, I understand. And yeah, you can refinance stuff, but I look at stuff like this, and again, this just makes me think, this is why I keep my credit on point. Just in case I want to go borrow some money, at least I will get a favorable interest rate. Like, I think this image is powerful for some, because I think sometimes it helps to see that visual as we're talking about the material and the theory. But like, no, this is real life for a lot of people. They got the same car and somebody paid a whole lot more, or is paying a lot more, just because of that credit score. So here's the score, y'all. Here's the breakdown of the FICO. I'm gonna spend a few minutes here. We'll kind of go around, the whole pie. But this is how they compute it. Again, each of the credit agencies, the credit bureaus, they do a little. Again, they got a slightly different recipe, but overall, this is how the score is really made up. So I'll start from the payment history, and I'll work my way around. We'll go from highest to lowest. You see the two pieces, right? Payment history and amounts that you owe, 65% of your score. So pay your bill on time, all the time. all the time. Again, if you can just do the minimum, that's fine. Do that. Yes, you might get hit with some interest charges, but at least you're making your payment on time. If I was a lender, if I was a bank, and I saw somebody who was just making the minimum payments, I like you because at least you're trying. The person who's not paying me, I'm gonna ding you on that report. So, you know, if you've had the tendency to be one of those procrastinators like we talked about yesterday, and you seem to be a little late, not cool. So let me say this. I didn't mention this during the credit piece, but here's why your credit report is important. It affects your job. When you get hired for a new job, they run background checks, they run credit reports, because again, this is a credit report is telling a story about you. Because if you can't manage your own money, and I'm hiring you for a position in my company that's dealing with money, maybe you figure it out once I do hire you. But now I've got something hanging over a hiring decision because I can't trust you. If you can't pay your own bills on time, you just might be late to work all the time. It might not have nothing to do with money, but again, you're not there to defend yourself. But an employer is going to make an assessment. They're going to make the assessment. You know, if you're trying to rent or get an apartment, a landlord, same thing. Again, any lender is looking to see, is this person going to pay me back? If you've always paid on time, I assume, and I'm comfortable understanding that, you apply pay me back too. Your payment history, it will help you because it tells a story. If anybody on here has, I don't know, I got in a little bit of not crazy trouble when I was young, but I always got kind of the benefit of the doubt because I wasn't always bad. Like I did stuff here and there. So people kind of like, well, that's just Jasper acting up. He's a boy, young boy. But for my repeat offenders, they didn't get no slack. And so a lender's looking at the score as the same when we're looking at your payment history. They're willing to give you a little bit of slack if you've shown them an ability that you've had to show them that you can do this. I'll never forget this story. I used to automate a lot of my credit card payments, and I think I had changed accounts, same bank with the credit card that was issued, and I forgot to add my new card. So shortly after midnight, I get an email that said I've been assessed a late fee. I was like, what? And so I was a little upset because I'm like, y'all saw that I got a new account and I literally just didn't reconnect my other account. Like, man, I get it. They can't do it automatically, but I was a little mad. But here's what I did. I called and I said, hey, this is Jasper Smith. I was slightly late on making that payment. As you all have seen, I recently changed my account and I didn't make the new connection. And so the young lady, she's like, hold on for a second, Mr. Smith. Comes back. She's like, okay, well, we reversed that late fee. And yeah, thank you so much for calling us. Is there anything else we can help you with? And I hung up the phone. That was a real story, y'all. I legit got my $35 back. I mean, I still had like some time before they would report that I was late. But again, like a few minutes after midnight, I was assessed a late fee. But I called. My history looked good. They reversed the fee. So now, let's fast forward about 6 months. I had stopped doing these automatic payments on my credit cards. I was just like, I don't mind. I still like paying bills online, but I want to go in, take a look at the statement, make the payment. So I was out of town and I forgot straight up. Like I forgot. So I called and I flat out lied this time. I said, I was out of the country. I didn't have Wi-Fi. Oh, I sold it, y'all. I sold it. And they're like, Mr. Smith, we'll go ahead and reverse that late fee. They hit me with that $35 again, y'all. I was like, let me get my $35 back. And they reversed the fee. They're like, well, thank you for being a valued customer. Is anything else we can help you out with? I was like, nope, hung up the phone. So if I don't have such a stellar payment history, they're not reversing those $70 worth of fees. That I know to be true. Your history. It helps out, y'all. Let's Charlotte, go ahead.
I saw Daryl's hand up before mine, but I don't know whether his question's been answered already.
Well, I don't know if Daryl left his hand up. Oh yeah, he took it. Okay, all right, cool. If you
Okay,
got another
good,
one,
okay.
all right. Yep, you good, Charlotte. Go ahead.
Okay, so I kind of have two questions, and you might be covering the second question a little bit later, but so I've noticed that there are advertisements now on TV about how you can do these different tricks to increase your credit score without necessarily making additional payments or, to your creditors or what have you. And I want to know if you know any of those kind of tricks in addition to just maintaining your credit and through your credit cards and making your regular payments. And then the second question is, excuse me, the second question is that what other entities can lower your credit rate? So like if you don't pay your doctor's bill, can they, post on your credit to one of the credit bureaus that you're not making payments to them, or your dentist or whatever? Any other entities that can do that?
That means yes. I'll come back to the first one. So the second question, yes. So if you're paying for any types of services and you just flat out don't pay, at some point it's going to go to a collection agency. If that organization doesn't reach out directly, they may just have a collection agency deal with you. So the debt the business will kind of write it off their books as a loss, and then the collection agency will be in control of picking it up. So there were a lot of outstanding medical bills that were in collections, and I think there were some laws that really went into play. Wasn't too long ago, but there were just it was an ungodly amount of people who had just not paid medical bills from like years and years ago, and they were still being reported as if they were current. It was a whole debacle. But yeah, if you have ever paid for some services or got some services and didn't pay for them, and you never paid, like, yes, that can definitely affect your credit at some point. You just don't know when. That's the part. They're not going to tell you, hey, Charlie, we've been trying to hunt you down for a year and a half. This collector's going to work on that now. You're not getting that phone call, but it could pop up on your credit report because I've seen it. And somebody was like, oh, I forgot. Try not to forget if you haven't paid somebody back, y'all. And here's I'm trying to glad you brought it up. Think about if you owed your cousin some money, if you owed your brother or sister, like if you owed a family member some money, how you think they're going to feel every time they see you? Like, they're thinking about it, and you took that cash. So your family, they don't have any recourse. Like they can't report that you're not trustworthy. But that's what these companies are doing, y'all. I mean, they're just making a complaint. Like Charlotte did not pay me, so I'm telling on her. That's what they're doing. So if a business has the authority to do so, they will send that report just because their feelings are hurt. You didn't pay me and you got something from me. That's just not fair to me. So you need to be penalized for that. So the tricks on boosting your score, I do have a slide towards the end. We'll talk about like improving your score and boosting your score. So I have a few ideas that I'll share in a few towards the end, Charlotte. So I got you covered there. All right, so let's slide over to amounts owed. Again, we talked about maxing out a little bit earlier. It's only bad if you don't pay it off. But let's say you're in a pinch and you have a lot of cards that are just, you have a higher balance or the balance is getting close to those limits. They're concerned. So the score is going to be impacted if you're hovering at like 90% of your credit limit. So if your credit limit is 100 and you're at 90, you don't have a lot of wiggle room. So are you going to pay it all off? Are you going to make multiple payments to get rid of it? But again, just to a lender, I'm concerned if I see all of your credit cards and you're always at like those higher limits. That just shows me, again, you're not being responsible. That's all of this. Again, y'all, this is telling a story. It is telling a story. So then our credit history. we'll slide down here, is how long. So this comes up where you got the credit card when you were younger and you don't really use it, and then you close it out and then your credit score gets hit. And so what happens is they like seeing a track record. Like they want to see this is 15%. So it's not as big as the amounts that you owe, but it's a big portion if you've had a card for 20 years and you close it out. Like that's got 20 years of history on you. And if you shut that down and all your other lines of credit or trade lines or credit cards, what have you, don't have that substantial track record, you might see your score be impacted right away. Like as soon as you close it out on the next reporting month, you will see that score drop if you're checking your score that closely. But having that account open is beneficial. However, I understand that sometimes people got that credit card years ago and there may be like an annual fee and you never use the card, and maybe there's no rewards that you get for using that card. It's kind of just there. It's just that active trade line that you've had the longest. My recommendation, depending on the rest of your, I'll say trade lines, it might be still worth closing it out and taking a temporary hit to your credit. Because if everything else is pretty good, then it's okay. Because I don't think you should be paying a fee if you're not actually using the card. Now, if let's say it's an older card that doesn't have a fee and it still has that track record, keep the card active. And all you got to do is just use it occasionally. Like I had this one credit card. So my very first card, the one I got when I was telling you about my 19-year-old self, I had a Capital One card with that $250 limit. After college, I never used that card again. And I kept getting letters every couple of years about keeping it active. So I would just like make one purchase and then that was it because I didn't have any rewards. I didn't need the card anymore, but I wasn't going to close it. And so I would try to keep it active as long as I could. And then over time, I was building substantial credit with other cards. And then at one point they were just like, hey, we're going to close out your card. I was like, great. I didn't call. They sent me another letter and said they're going to close it out. Now I don't have the data to show how my score was impacted after they closed out that card. But the next time I saw my score, so if it did impact it, I don't know, because my score was still great. So I had established enough other credit, or I had enough of a history with other credit cards that it was okay that oldest account was closed out. But you don't want to make the call to close it out. I still can't verify if that's true. If they close it out, I think it impacts your score differently. Again, I do not know, y'all. There's like this little black box with credit, and there's just certain things I just will never know because I'm not actually on the inside. But just from personal experience, losing that oldest account did not impact my credit that much. So we'll slide a new credit and we'll end with types of credit. So new credit is just how many accounts are you opening up? I don't think you need a lot of accounts, honestly, because you might get carried away. I just don't want you to do too much. So having like a few credit cards is fine. Or maybe you have, well, I'll come down and set the last part, but just you don't want to do too much. So every time you go to the store, your favorite store, and like, hey, you want to get this card to save 20% off? The answer is no. That is a hard inquiry. They're going to run right there. And even if you get approved, again, that's a hard hit to your credit. And again, it just think about it, y'all. It just looks a little weird if you're getting a new card every weekend. There's something wrong there that you needed a credit card every weekend. And I also say with what's called hard inquiries, and then there's soft inquiries. So a hard inquiry is when you're definitely applying to try to get a loan or a credit card. Like you're trying to apply to get something. And so that's a hard inquiry, which they're going to note that on your credit report. It's only 10%, but the only example I can ever share is this gentleman came into my credit course one time, and he was like, I was looking for a used car, and he was going to used car dealerships like every weekend because he didn't work on the weekend, so he had time to kind of drive around and check out these cars. But he was allowing these dealerships to run his credit every visit. Every time he pulled up to a used car lot, they were running his credit to see what he could get approved for. But he did this a lot. Like he had over the course of a month, he had like 15 inquiries. And so it impacted his credit score, but that was weird. So a lot of inquiries could have a small impact. Again, it's only 10%, but that could impact your score negatively. The soft inquiries, think of, and usually they will, if you're doing something that's done a soft inquiry, like I know when I was doing credit counseling, like that agency was approved. And so they could run a report or two, but it was a soft pull. So you always want to ask, if it's a soft pull, that inquiry does not show up on your credit report. And you can ask that. In some organizations, typically they'll be like nonprofits, they will disclose that this is a soft and not a hard inquiry. Omawale, hold on once, I'm gonna finish up types of credit and I'll get to you. I'm gonna finish up this thought. So the last 10% is types of credit. And so when it says what kinds of debt, this is revolving or installment. So a student loan, a mortgage, installment debts. It's the same payment every month for a specific period of time. Installment. Revolving is think credit cards. That payment you make every month is going to vary from month to month. It's revolving. It's never going to be the same. And so types of credit, they just want to see what's your, sometimes you might see it called credit mix. So again, another personal story. So I've always had credit cards. And so at one point in my life, my score was kind of dragging. Like, it was still good, but I was like, why is it dragging? And so on my report one time, or I had gotten a credit analysis, and they were like, you don't have any installment debts. All you've ever had is revolving. So I had a whole bunch of credit cards. And so I said, let me test this system and see what happens. And this is a real story. So I had about 4 credit cards at the time. Some had some small balances. So I opened up a personal loan. I went to this website, opened up a personal loan. All I did was move the debt from my credit cards to the personal loan, because I was trying to test the system. I'm big on tests. Let's see if it really works. So I shuffled the debt from one pocket to the other. And I swear to y'all, within 2 months, my credit score went up, simply because I added an installment payment with the personal loan. Still owe the same amount of debt, but I consolidated it from 4 credit cards to 1 personal loan. And I was going to save myself a little bit of interest by doing that. So that was a good strategy on like effectively like planning with my, debt planning or attacking. I saved myself a little bit of interest. But it also, my credit score went up, and I was like, what? And then I remembered this. Oh, that was my first time getting an installment type of debt. So my credit went up. All right, Ms. Omawale, go ahead.
Would you go back over hard inquiry versus soft inquiry again? Because I have had credit union people ask, do you mind if I run your credit score? Like what your credit score is, but apparently they're going to do a hard inquiry because it would have an impact on the number and lower it.
Yeah, yes, it has the potential. So the thing about hard inquiries is, like, they know you're trying to do a transaction, or they need it for some reason to do business with you. They should be able to say this will affect your credit because we're going to do a hard, like, they should be very clear about that if that's what they're doing. Again, that's okay. It's just they don't like the lenders who look at your reports, having a hard inquiry here and there, it's totally fine. It's only 10% of the score. But if you have too many of those, now they're like, what is she doing? Why is she applying? Like, they just gonna have questions. But they're not gonna call you and ask you. You're just gonna get a lower score. Like, so with the soft inquiries, and let me say this too, somebody's always looking at you. So even if you pull your credit, we're gonna talk about the credit reports in a little bit, you'll see a lot of soft inquiries. Like somebody's always checking up on me, but they're soft inquiries. But part of this is the business of like banking, of credit offers. Like, they just want to know who they need to send stuff to. So a lot of your, maybe I remember Capital One, I saw them as an inquiry listing. It was a soft inquiry, but like every 3 months I would see them listed. I'm like, I guess they're trying to get me another credit card. Because all they're doing is checking up on you to see, should we send you an offer? And the better your credit is, the better offers you will receive in the mail. And even if your score isn't that great, they still gonna figure out, well, let's send them a different type of offer. So part of this is, y'all, it's a game. I hate that we got to play this game. I'll be honest. I hate that I have to play this game of I got to use a card, although I don't need to. But I also got to be mindful of these payments and all these components. I have to be thinking about those. And so I don't want people to get upset. I want them to understand these components and these pieces. And then let's figure out how do we move past and improve our scores. That's the piece that I want to get us to. But again, like my mom didn't explain this to me when I was 19. She kept it so basic, but it was basic enough that got me to do it the right thing.
Right way.
So she didn't need to spend all this time showing me this diagram, but then I started living it. And again, everything that I would see, I would say, oh, that's right. Okay, I see how the system works. But if you've never done a deep dive into your credit, you've probably gotten upset with somebody and you're like, man, they're trying to get me. Was it them? You sure? Again, yeah, we can always place the blame on somebody else. But if we understand the rules to this game, we will be able to use them to our advantage.
Okay, so just let me clarify. A soft inquiry does not use all 5 of these factors.
A soft inquiry does not impact your score.
No, but what I'm saying is, what is it? I don't understand the elements of a soft versus a hard inquiry. Does it impact all 5 of the FICO elements that you have on the PowerPoint, or?
So I'm trying. How can I explain this? So like I'm trying to think how can like a soft inquiry is like a preview to a movie. You get a snippet. I get to see what the movie's about, but I don't get to know what happens at the end or the beginning. I get a little snippet. So a soft inquiry, they're getting a snippet of what they need to be able to see a little bit of your information. Doesn't impact anything. It's just we're taking a little peek. The hard inquiry, we're doing a deeper dive because we need to see and do a full-blown assessment of if we're going to say yes to you for whatever it is you're about to apply for.
Right.
So you get the whole movie. We need to see the whole movie. We don't just want the preview. So a soft inquiry, all they need is a little bit of a, hey, this is the person, this is their social. They just need to know some basic, great, it gets done. But a hard inquiry, that's going to show up because they need to see the full package.
Okay, so then if they're just doing a soft inquiry, then where does the debt to income ratio come in? Does that figure into it as well? Because if you have a score above 700, you should be fairly stable. But then if your DTI is funny, you know, like it's on the wrong end of the percentage scale, will they look at you badly?
So here's what I'll say. Save that question for Thursday because y'all are going to have a Q&A with bankers. I've never been a banker or a lender, but save that exact question for Thursday and say, hey, see if they can get you that answer. Because again, y'all, I'm sticking to credit. Like, again, I'm not the bank. I'm not the lender. But these are questions that you want to ask a banker. And if the banker doesn't give you the right answer, you find another banker, credit union person, like you find the answer, but there's got to be somebody who's in this. I'm not in this space. Again, I'm on the outside. I know the rules, the credit. Again, these are some of those kind of, remember that little black box of questions? Jasper don't know. I'm gonna throw it. And honestly, too, I think part of why I don't know is I don't want to take the time to figure it out because I don't benefit from like doing that extra work. And that's just my personal opinion. I think if I was a banker or a lender, I probably would be a lot more knowledgeable about all the intricacies of how banks assess risk, because that's what we're talking about here. But I would say save that question for Thursday. Daryl, go ahead. See your hand.
Okay. My personal goal is to improve credit, get into that, 700 range. I'm right now, right almost there. But to improve scores in order to invest in real estate. I think I mentioned that yesterday.
Yeah.
How does what we're talking about now impact the ability to get, I don't know if you know about this area, but loans for the sake of investment property, like one you're going to turn real quick, 6-month turnaround sale. How does the credit worthiness plus, I assume you have to have some kind of a DTI from income to go with that. In other words, how do you build the lending track record to get the loan to move into investment property? That's really what I'm getting at.
Yeah, that's okay. So again, I'm gonna ask you to hold that question and ask the bankers on Thursday. I don't know if there'll be mortgage or real estate bankers, but again, I'm not a banker, I'm not a lender. Here's what I'll say. You can still get a loan at a certain credit score. You're just not going to get favorable interest rates. That's the key. That's the short of it. Again, that's one of those you want to ask a mortgage banker. Again, I'm not the banker, not the lender, but you can still get the loan. You just won't get the most favorable rates. All right. So
where do those better rates come in? Like the 725 area, higher, or is it a matter different. Of how long you've had a good rate, or what's the real factor that gets you to better rates?
So it's gonna be different. You know, honestly, again, y'all, I'm not the lender. So any lending type of question, I don't know, y'all. I'm sticking to the credit stuff that I know to be true. Okay. But certain lenders are gonna have a preference for a certain type of customer. So the scale, so everybody should really strive to be over 740 with all three of their scores. Once you're over 740, 750, you're in the excellent category. Hmm. So a 745, a 750, 760, or 800, the interest rate might not be that much different unless you've had a personal experience where you've tried to take out a loan and saw some actual terms. Again, y'all hit me with a lot of lending questions. This isn't a lending course, so I'll just say be mindful that I do not know a lot of these answers because I don't make up these rules. And every lender has different rules. Some lenders won't talk to you because of the color of your skin. You in the wrong neighborhood. You got the wrong zip code. So they could use some other factor aside from having a great credit score to not give you the loan. And this is the realities of racism that have plagued the financial services industry. But again, a good score, a great score is still just one piece of the pie.
Right.
So I think I still want to encourage all of us to be mindful of getting those scores up. Again, the goal I want everybody to get all these scores over 740. Let's talk about that. What they're going to decide about us, we shouldn't waste our time. If I get my scores up, that's going to help me at least be a cut above everybody who doesn't have my score. That's the starting point. So I understand people want to know a little bit more, but again, I would say some of these are going to be just lender specific or banker type of questions that I just won't know. And so what I'll say is, I just want to get to Mary really quick, Daryl. And I do want to get to a quick act. I'm watching the clock, y'all. So if y'all can hold these questions, throw them in the chat. We still have time for the Q&A. Throw them in the chat or write them down. We'll come back to them, but I did want to get to Mary. Mary, go ahead.
Hi. So I have what's considered to be a excellent score, somewhere in the high 740s. But I got two offers of credit. One is from my Capital One account. They're going to offer me one that has like benefits where you can like make purchases and get like percentages back. Another one is a business credit card because I just opened got a business license, and I was like wondering.
Oh, they're gonna come after.
And I have a $3,000 student loan, and I noticed the thing with debt to credit ratio, and I was thinking if I got these two credit cards, would that better my debt to credit ratio, and or would that be not such a good thing and may possibly lower my credit score? So that was the kind of worry I had. Like, yeah,
that's a good one, Mary. So I don't think there's anything wrong with getting access to more credit.
Okay.
Let me say that first. So whether it's business credit, personal credit, I'm not a business credit expert. I'm still trying to learn that game, but having access to money or credit is always a good thing. So if you don't have, I'll say, a lot of credit cards or a lot of different trade lines and loans, and getting these additional cards, it may be like a temporary, like dropping your score because you're applying to get new cards. I'll say at least on the personal side. And then once a couple of months have gone by, even if you don't use the card that much, but you get access to $5,000 more on the credit, like your personal credit lines, like that boosts your score because you have access to more credit. So like the example I'll get to here in a little bit when we talk about boosting your score. Like I've heard people who like, they don't want to get an increased credit limit because they don't really trust themselves from a spending standpoint. But think about how the game is played. If I only have access to $2,000 and I always run a bill of $1,000, I'm at like 50% of my monthly spend. Like I might not be able to handle that long term. But if my credit limits are 50,000 and I still just kind of spend that 1,000, I have a lot more wiggle room. So my score, although I maintain the same level of debt, I've got such a bigger buffer. So getting more credit is not a bad thing. It's just, we got to look at the whole picture and say, if I get this new credit, this new trade line, like how will that impact the overall picture? Because if your scores are already good, it might not be a bad thing to add another trade line. Not saying you're going to use it, but again, it could be as simple as, I just want to have access to more credit. I mean, that's why I did a lot of credit cards when I was younger. I just wanted access to more credit. I wasn't using all of them. All of them didn't offer rewards like you mentioned, but I had my credit limit was super high. And I was like, great. So if I got into a pinch, I had a lot more wiggle room. So I like having access to money. Having access is better than not having. But for each individual person, it's going to be a little bit different. All right, so really quick, I was showing y'all annualcreditreport.com. If y'all want to also pull this up in your browser, you don't have to go through it yet, but I share this in every credit session around, you need to know what's being reported about you at some point during the year. Whether you do it twice a year, quarterly, once a year, just occasionally you should check this site. So prior to the pandemic, it was, you could come to this site, check it, one credit report from the Bureau every 12 months. But the pandemic hit, then you could do it every month. And so as you all see right here, free weekly. Now, I don't think, unless you're trying to do some things, I don't think weekly, you don't need to do it every week, y'all. But I need y'all to go ahead and get your reports and from all three. So your one homework assignment tonight, when you log off, you're going to come to annualcreditreport.com. So pull it up in your browser right now. If you got a second, just leave it there. So when we log off, just maybe pick one. So you go to request and you're gonna fill out some basic information. You pick which credit agency you want to get the report from. And that's it. And it pops up. So what they'll have to do, they got to verify. So I'll click through a couple here, a couple screens. So here's the basic information: name, your birthday, your social, verify your social. Gonna ask for an address. If you've been moving around, be mindful, just put it in the right address. They're gonna ask, have you been at that address 2 years or more? If you haven't, they're gonna ask for another address. So have that address ready. I'm not gonna go through all the steps, but this is how the form looks. And the next step will be a kind of a verification of, they may ask you a series of questions of like, hey, have you ever had this phone number? And they'll list like 4 different phone numbers. They will say, have you ever taken out a loan, or have you ever had a bank account? There'll be random, the security questions. And I understand people's concerns about data. Your data's out there. Let's just look, it's out there, y'all. But if y'all want to go into all the conspiracy theory, this isn't the session. I'm just telling y'all, look, somebody like, man, I'm not trying to share. Well, okay, you just won't know what's being reported. Again, these reports are free. They're free. You don't get a score. And again, I'm not concerned about the score, because if I see the report, I got an idea what your score is. I've done that much of these where I've looked at credit reports. I'm like, you're probably in the lower 6s, upper 6s, maybe you're in the 7s, because I can just look and see what's on these reports. So annualcreditreport.com is the resource I want everybody. Again, if you don't have to do all 3 at the same time, but maybe just check on one of them. Just check on this. Goes directly to these sources. I know some people are fans of, there may be, you may have a credit card that offers you a FICO score of some sort. Just read the disclaimer, because it ain't all 3. It'll be a score from one of the 3. It'll never be all 3. So they may offer you a score, maybe you get some free reporting, some free monitoring by having that credit card. Those are useful. Some people may use Credit Karma or some Credit Karma alternative that gets you 2 out of 3, and Credit Karma gives a score and a report. Score is never going to be the same, but I think Credit Karma still uses TransUnion and Equifax, so you won't know Experian score. So don't let your scores, if you're using Credit Karma or some other alternative, Don't let those 2 scores fool you, because you don't know what's being reported on the 3rd one. I've had too many people get excited about 2, and I'm like, so what's on the 3rd report? And you don't know what's lurking behind that door. So again, I say come here first. Just save yourself some of that drama. Just come here first. If they free. Free. I had a guy pay me one time to do this because he wouldn't go do these steps. I said, dude, you're going to feel bad when we finish this meeting. I'll show you how easy it was. I was trying not to take his money, y'all, but he was like, I'm not going to do it. I'm like, well, I guess you're going to make this investment of my time. And we were finished in 20 minutes. Downloaded all 3 reports. We printed them out, and we were able to kind of work on his debt. So annualcreditreport.com is the resource I always share in these sessions. Share that with everybody, every single person you know. I'm worried about my credit. Just go right to your report. Let's see what the report's talking about. And again, don't feel overwhelmed. Do 1 report. Look through. Some of the biggest errors on credit reports: misspelled names, bad phone numbers, bad addresses. We ain't got to the actual stuff, the real stuff, just basic stuff. If they spelled your name wrong, you should dispute that. And there's some easy ways you can dispute information right from those online platforms. Now, through this site, you may, when they connect you to one of the agencies, you may have to set like a quick online access, because if you dispute stuff or you need updates, they'll want to do it via email, because trying to call them, good luck. You can do it, but the online system works just as well. All right, so oops, wrong button here. So some quick ways, and I think Charlie kind of mentioned this earlier about like boosting your credit, and I'm gonna kind of go through these pretty quickly here. Maybe we got some bad accounts on here, y'all. Maybe we got some bad accounts. Wallet, can you hold it to the Q&A? Just I'm watching the clock, so I just want to get through these last 2 slides, and then we'll come back for the Q&A. So just jot your question down and throw it in the chat for me. We'll get to it. So strategies to improve. I didn't want to spend too much time here, y'all, but honestly, if you just pay back what you owe, your scores will go up over time. Like just if you got the money, just pay. Look, living on this principle, I'm upset with this company because of what they're doing to me. What did you do to cause the issue? So I swear, this is a real story. I met so many people who had a collection account, which is a negative account on your report, because they didn't take back the cable box when they moved. I swear to y'all, I saw AT&T and Comcast so many times. So to Charles' point earlier about can business come after you? Well, yeah, the cable companies did. They were like, these people aren't returning our box and the remote. And these accounts, I swear to y'all, they were like $70. And they were just chilling on people's collections. And I was like, just pay them the money. Hey, it wasn't, I mean, it was just like the principle alone was having people having these negative reports. And I'm just like, if I could pay, you should. If you can't pay, all right, let's talk about it. Maybe I can't pay full price to get this debt removed. Now I want to talk about settling the debt. So I owe you $1,000. Maybe I can't pay you $1,000. Maybe I can give you like 400. Maybe I can give you half. All right, maybe there's somebody on here who has actually received a settlement notice. And I'll just tell you the game really quick. You get the notice. They say, and it's usually from a collection agency, pay 60%, 70%. You're never paying the full price. But if you pay this percentage off, like a lower percent, we'll go ahead and update your reports, clean things up, you'll be good. The reason the collection agency does that is because they purchase your account from a bank, the credit union, whoever you defaulted on, whoever you didn't pay back. They buy the list of names with your name on it and what you owe. And it was relatively cheap for them to buy this list because it's probably hundreds of people. So even if you take the settlement offer, they still made money on the deal simply because you made the payment. So you, in your mind, again, think about this. This is business, y'all. Games being played. So they bought it for relatively cheap. You already see a discount in terms of, oh, I owe $1,000, but they asking for $600. Oh, I can pay that right now. That's how they make their money. Now, settling, it's good because you don't pay the full boat. Now, how that's reflected on your report, well, sometimes it ends up being a blemish because some collection agencies might not remove it from your account. So you will see on a report, it'll say paid less than full amount, but there's no balance, or it'll say settle for less than full amount. So there'll be some language in there. So again, this is one of those lender questions that I won't know. You don't know how that's going to be perceived. I may look at it and say, you know what, at least they paid them back. We're good. Somebody might say, ooh, they ain't paid them back in full. So they might not pay me back in full. Again, y'all, not a lender, but that's how they thinking. Again, I don't know the actual answer, but settling could be helpful and useful if you can't pay the full amount, but you can pay a fraction of that. And if you're going to settle, this is just my rule. If I have to do payments, I do no more than 3. If I can't get it done in 3 payments, I can't pay y'all right now. And that's how you handle that. The only person I'm doing a payment plan with is the IRS, because they get in your pockets real quick. They got control. The collection agency, it takes them a little while longer. Yeah, they can maybe take you to court, but we're talking like small. These are usually like smaller balances. The IRS, I don't play with them. Like if you need to do a payment plan, do it. But for like collections and debt, I want to maybe, if I can do 3 payments, let's try it there. And my go-to number for settling, I always try for half, because you're just negotiating. You just want to see how low they go. Make up a story if you have to. Hey, I can't pay y'all but this much because I broke my leg last week. You know, I mean, people have tried a lot of creative things. Some of these credit agencies or credit repair agencies have done some creative things to help their clients pay less money. The last one is disputing. So this is a big one for a lot of people, where if you really just don't have the means, disputing might help you out. But it only helps out if some of your debts are old, like I'll say older than like 3 years, maybe 5. Maybe the older the debt, the better, because it's very hard to prove that you still owe them if it's been that long, but it may still be getting reported on your report. So the example was that I did a workshop like this. The gentleman said, you know, I've got 10 collection accounts or 13 collection accounts. And he was like, Jasper, I owe all of them. So he was totally transparent. But the rule around disputing is there's some days, like there's this, they've got, if you submit a dispute, you can mail in letters, you can do it online through annualcreditreport.com. You get between 30 and 45 days until you hear back. So they've got to verify that it is you. How they verify you, couldn't tell you. Remember that little black box? We're going to throw that in there. Don't know. But they got to prove it's you. And if it's that old of a debt and they can't prove it, it's got to get deleted from all of your reports. So this gentleman, 13 collections, he owed them all. They were pretty old. I said, let's just dispute all of them. There's some strategies where you dispute a little bit at a time. I said, we ain't got that kind of time. And he didn't either. So we sent a dispute to all 13. And we didn't have some like long drawn out letter, no explanations. There was an option that said like, this isn't my debt. We just selected that for all 13. So we gave it a month and a half. Letter came back. They mailed him a letter from TransUnion. They only verified 3 of those 10 collections. Those other 10 collections got deleted. And we saved that record, because in the world of credit and disputing and negotiating and settling, you better have proof. I don't take anybody's word for it. So we had the paper, and the paper said all these debts have to be removed from his report. And so all we did was we then went and ran his other free reports from annualcreditreport.com. And we saw some of the same debts in collections showing up on the other 2. So the 10 that got removed, all we did was make a copy and say, hey, these debts line up with those debts. Y'all got to get rid of them. So we did a lot of cleaning. Now, disputing doesn't always work, because if they verify you, you're still on the hook. But it's one of those, if I have no other options left and I really don't have the means to pay back, so be it. You dispute and see what happens. It will open you up, because they will start looking up and trying to find you and verify. Might not always work it out in your favor, but if I'm really in a pinch and I have some older debts, like older than, I'll say 2 or 3, I'll say again, the older the better, you might have a shot. Might have a shot. So lastly, I'm gonna kind of wrap this up here in a few minutes before we get into the Q&A. I know we got to do the book raffle tonight. But the rebuilding or building, I asked this question in the initial poll around you needing a credit card to establish credit. So credit builder loans, I love these. These are great. I've done a lot of programs with re-entry people. So people who've been in prison, they need to reestablish credit. So the credit builder loan, I'll explain it roughly or briefly. Normally you apply to get a loan, you get the money, and then you start making your payments. A credit builder loan, you still apply, you don't get any money, but then you start making payments, and those payments are reported to the 3 credit bureaus, the agencies, right? So at the end of the duration of the credit builder loan, usually people do it for like a year, maybe a little bit longer, then it almost became like this forced savings. So like a portion of what you've been, those payments just keep adding up, and then you get it back, or a portion of it in a savings account or a CD or whichever platform you use. But it is a great way to begin your credit journey or start to rebuild if you need something active. And the ones that I've seen, the payments are like $25 a month. And if you can do that for a whole year, you can start one now, 6 months later, do another one. You can slowly build them up. That will help you improve your credit or boost it. So to Charles' point earlier, that could be a quick way, an easy way to not overextend yourself, but to add something positive to your credit reports. I love them. Credit builder loans are new to the game, but they've helped a lot of people, and I love them as a solution. They weren't always available, but I love them. A secured credit card is another good one for somebody starting out or rebuilding, where the bank or the credit union is looking for a small deposit, usually maybe $200-300. They just need that for good faith. In case you slip up, we got a deposit we can use. But it works similar to a regular credit card. You make your purchase, you pay off the bill, make your purchase, pay off the bill. And then after maybe a year or so, usually about a year, then they'll switch you from a secured card, and they'll do like an unsecured, and then they'll kind of raise your limit. But again, great starting point, because now you putting that deposit shows that the bank or credit union can take a chance on you. Then the last one, again, this was to Charles' point about tricks to boost your credit. You can just be an authorized user on somebody else's credit card. So I did this for a cousin. She was trying to get a house. Her credit wasn't bad, but all she had was like a big student loan and a credit card with a very low limit. So I added her to one of my credit cards that has a pretty high limit. And I just said, I'll let you kind of ride my coattail for 6 months to get you a credit boost. Because she was also applying for some other cards, but she needed to get that score up because she was in a program, and she gave me like the time frame. So I added her as an authorized user to my credit card. I did not give her a card, but she got access to that trade line, and it started showing up on her report that she had an extra, I think that card at the time had like 25,000. So that boosted her credit score immediately because she had access to that much more credit. She still had a big student loan that she was paying on, but I just gave her access to more credit while she was still building. So she got into this program. I told her I would take her off after 6 months. So she did lose that trade line, but she had built up enough of a repository over that 6 months that she was able to get her loan to buy a house. So you know anybody with some good credit who you can trust. There's a level of trust that goes into that. Gonna have to be able to trust them. But being added as an authorized user is another great way to get a credit boost without having to physically have a credit card. All right, so I know I ran kind of through those last two pretty quick, but I'm gonna bring back up really quick before we hop into the Q&A. I'm gonna bring back up, we have an exit poll we'll do really quick, and then I'm gonna have, I think Charlie will come back on and do the book raffle for tonight, and then we'll still have plenty of time to get through the Q&A. So give me a second. Let me
Jasper, do you mind if I launch the poll so I can download the results on my computer?
Yeah, go ahead. Go right ahead.
Okay. Let's see.
And so I'm just thinking too, maybe because I'm just the co-host is why I probably couldn't save it, since you're the host. So I think that might be what it is. Yeah.
Mm-hmm.
Right. So take a minute or two here to answer a couple poll questions. Right. So just a couple quick poll questions to wrap up tonight's session. And then we will do the book raffle shortly after, and then we'll get to those questions. I know while I had a couple, I think Daryl might have had one, but we'll, if anybody else pops some questions again, if you got a question you want to throw into the chat while we're doing right after you finish your poll, feel free to go ahead and do that right now. Actually, I'm gonna take a look at the chat while we do the poll. We got about half so far. I'll say maybe give it like another 30 seconds, Simone. We can go ahead and close it out. All right. So did you learn one thing from tonight? Can you mess up your credit, fix it, mess it up, fix it? And then the credit resource that everyone should share with family, friends, coworkers, everybody. There was one resource that I shared tonight.
You want me to end it now, Jasper?
Yes, ma'am.
Okay.
Right. Right. See, I was paying attention. I like this. Good. Did everybody learn at least one new thing? Yeah, only one. I know we cover a lot. Again, we have limited time on these sessions, but it's like maybe there's that one thing that I said, you're like, yep, that's what I was trying to figure out. And again, I think credit is still challenging because there's just some things we're just not gonna know. And as soon as people start asking those questions, I kind of lock up because I know it's like it doesn't even serve us. It doesn't serve us well to worry about some of these things that we're just not going to ever know unless we are on the inside. And that's come from my experience. So I just know that if I stick to what I do know that works, that's good enough for me. So thank you all for that poll, answering those poll questions. So I appreciate that. And then I'll bring up Charla. You want to go ahead and chime in, Charla, and we'll do the book raffle or the book giveaway really quick. Oh, you're on mute. You're on mute, Charla. There you go.
Sorry about that. Thanks. I see there's a couple of inquiries about additional consultation too in the chat. Okay. Drum roll, please. Thank you. The winners for tonight, tonight's book raffle is Donna Hayes, Anita Askew Wharton, and John's iPhone. We don't know your last name, John. Sorry. But John's iPhone. Congratulations. Please make sure that Simone has your first and last name and your email address in the chat so that she can send you the information and get your mailing address as well. Okay, congratulations. I hope you all had a wonderful time. We still have a couple of minutes for some Q&A. Jasper, take it away.
Yeah. I'm just going back to the chat really quick. Make sure I saw a couple a little bit earlier. Let me see. I'm gonna hit these really quick and let's see. I'm gonna try. So Andrea had kind of asked a question about opening up a 0% interest rate card, paying out the higher interest. And if she does this a lot, would that negatively affect her account? So that sounds like more like the balance transfer technique. Nothing wrong with doing balance transfers to save yourself on interest. So if you have that introductory 0%, just know how long is that period? Because the month after, if there is a balance, you're gonna get hit with interest. Speaking from experience, because I signed up, it was like 13 months. And Jasper forgot his reminder and month 13 came and I had a small balance left. And I was just mad at myself for having to pay that interest because I literally was like, the plan was working until it didn't. So there's nothing wrong with doing balance transfers. Just be mindful of like those time frames and just make those reminders and don't be like me and forget. And so I got hit with a small interest fee that last month, but I should have had it paid off in 12 and not 13. Again, again, my fault, but nothing wrong with having a lot of cards, everybody. It's the timing mechanism. So if you're doing it every so often, that's okay. So you may have some trade lines, you may have a lot of them. That's totally fine. Totally fine. All right, let me make sure here, make sure I saw that one. Credit. John, your question about starting a business and a small business loan. Again, I would maybe say that for the session on Thursday. Y'all are gonna have bankers. So all these lender type of questions, if y'all don't pepper them on Thursday, I'm not gonna be able to make Thursday a session. But Charlotte, I'm gonna call you and say, how many questions did they ask the bankers?
Right.
Because they were asking the non-banker. So yeah, small business types of loans and banking type of, that's why we have the session on Thursday. That's exactly why we have it. I saw Daryl's question about the consultation. We'll speak offline, Daryl. We still got another session tomorrow. But yeah, if anybody wants to do one-on-ones, we will follow up after the series is over, and I'll give y'all the full breakdown on how I work with people.
Excellent.
Hello, this is Gladys Carey. I came in a little late. I'm not sure, what was the answer to the last question that was just given? Credit report you share with everyone is what?
Oh, annualcreditreport.com.
Oh, okay, thank you.
Yep, and I'll type in the chat, Ms. Glass, hold on, annualcreditreport.com. Annualcreditreport.com, that's where you can get your free report. You can check it every week. You don't need to do it every week, but you can check if you need to. But at least everybody download one free report tonight, if not all three, just so you can take a look to see how they look.
Thank you. I was already in.
Okay, perfect. So Miss, all right, so this is a good one. So yeah, so these offers you might get, this is so if your scores are decent, you're going to keep getting these offers. And these are some of those like soft inquiries where they're getting enough information to know they might be a good candidate for another one. It's hard to kind of stop it. And the reason I know this, if you read a disclosure or like a privacy statement, there's just some information you cannot stop, because I've tried. I'm on like do not call list. I'm on do not email list. There's like some limitations. So every couple of years, you kind of got to check, but I don't mind it because I'm not tempted by the offer. I know if I'm ready and need something, I will go look and then apply. Just because they send you an offer, that's just like somebody trying to take you out on a date and you're not interested. You're not going to call them back. So you shred the offer and go about your life, but you're not going to stop getting them because there's just some information from a business standpoint that you can't stop from being shared. The other point here was around like your utility payments. There's been, I don't know if it's, I want to say there might have been some legislation around. If not legislation, there is an entity, I'm not fully well versed, but making rent payments and utility payments can count towards your credit worthiness. I just don't know the names. It's coming. It's coming because reentry folks who have gotten out of prison need it because they have somewhere to stay, but they're productive citizens now. They need some proof because they can't always apply for credit. We have a lot of immigrants who also need this, who are paying their bills on time. But again, the banker, the credit union might not trust them with the credit. So it's coming. The mortgage piece, I don't know if they're going to add that. I don't know if they're going to add that.
Okay.
But I agree that I think if you are making those payments on time, that says a lot about who you are. So it really is in alignment with how we are assessed, like these credit scores and reports. It's in alignment. It just hasn't been widely adopted yet. But there are some vendors out there who are trying to work in this space because it's a good one for me. I think it's very positive.
Yeah.
Very
well, I was
positive.
wondering because there have been so many people who have had to have rental assistance to catch up on back rent because of the pandemic. And I'm wondering how that impacts on your credit score and your credit worthiness and trust.
Yeah, I hope, Jasper can't just like hit a switch and make it different. I wish they would just include it. They look at everything else about like, why not just add those? I mean, yeah, it'd be a little more paperwork for somebody, but I think for some of us, we don't skip out on that rent. Well, let me take that back. Some people do, but the majority.
Well, some people lost jobs during the pandemic.
Exactly.
And then they had zero income.
Yep.
Then in California, the Department of Employment, the Employment Development Department put people on pandemic unemployment. And then I think in 2021, they canceled it. And if you couldn't qualify for regular unemployment because you hadn't had $1,300 in a quarter within that 18-month quarter before, well, if you weren't working, you didn't have any money.
Yeah.
So then they wouldn't put you on unemployment payments in the regular unemployment situation, which means that you now have $0 coming in from your pandemic unemployment because the pandemic unemployment got canceled. And then the regular unemployment that you should have been on from having worked previously doesn't apply. And so you don't get any income from that either. How does that, how do the credit people deal with that? I mean, because that's not something that you were in control of.
I don't know. I do not know. I mean, I would always hope that we could be lenient, but you got to also think about like the society that we live in. They're just like, man, everybody isn't struggling. And I'm just speaking in general, a general sense is that, so if I try to be lenient and help a small group of people, like I almost got to keep it a secret because there's probably millions of people who need that same help and support.
That same help, right.
But in the structures that like the society that we live in, I'm not going to do that to my detriment of my business. And I'm just putting my business hat on. Not that I don't want to help people, but I can't help everybody.
No, I'm not talking about small businesses. I'm talking about people who are
individuals.
Individuals with government subsidies from someplace to help them over this hump, which was not their fault in the first place. And then they get penalized when they try to get a loan because they didn't have any income for 12 or 15 or 16 months.
Yeah, I don't disagree.
That's what I'm talking about.
Yeah, I don't like our system some days, but I don't like it. But I know that everybody's not gonna get the help. That's just the reality. It's hard for me to it used to be hard for me to digest kind of what you're explaining because you know they can help. Like we know.
Yes, they can.
We're not gonna go there tonight. We know that help could be provided. I'll leave it at that. That we're not gonna go down that wormhole, but I understand where you're coming from. It's just a battle. And I'll say this to the group. There's just some battles I'm not gonna win. And I'm not gonna try to fight because I've got too much on my plate to worry about to try to save the whole world today. So I think I use like even these sessions will occur. Like if we can just, if this group right here just gets it together with their credit, and then all of you go tell one or two other people, like that is gonna be more effective than me going to the top of the food chain and hoping to get somebody's ear. That's something that I had to come to grips with, because I think there's something to say about grassroots effort and then starting from the top and then hitting it from everywhere in between. But I think it also has to do with people's own capacity issues. So I have a young child. Yeah, I'm worried about the world, but now I got a kid to feed. So now my priorities have shifted. But there's a demographic of I'll call them my elders who they're retired and they got time and they will sit on the phone all day. And like, I can't wait to be that dude where I'm just like stirring the pot because I got time. Yeah. I need something to do for the next 4 hours. Let me make some phone calls. Let me try to get some money for some people who need help because they don't have time because they're trying to find a job. So let me try to help. And there are a lot of programs, and I think even Occur does a lot of this great work where they're trying to help the masses. And I'll say it last night. Again, y'all, we didn't double our attendance tonight. So again, our message is only hitting a few ears. But Charles, my bad. Go ahead, Charles. I saw your hand. Go ahead.
Oh, that's okay. You were on a really good roll there. I was about to get up and start clapping for a second there. Like, you go. Yeah. I just wanted to say, generally speaking, in regards to your question, Omawale, and as well as anyone else, But I've had some similar circumstances, not quite the same as you described in your example, but some similar circumstances. And I found that Experian can be very candid. They'll be very candid with you in regards to what your limitations are, how they treat the situation, generally speaking, and give you a full breakdown of the impact to your credit and how it can be adjusted. I mean, I was amazed. I just, nobody suggested ever that you go to the actual credit union and talk to them. And this was long before I met Jasper. So I did. I reached out. I'm like, okay, let me talk to a representative. And you'll be surprised how much you'll learn from doing that. They're very candid and open about their practices and their approach to individuals in general. So I would recommend that everybody take, some time and just reach out with, I said Experian, that's the one that I reached out to. I didn't go to all three, but anyone that you feel comfortable with and ask those type of questions. And they need to know, they're probably not paying any attention. They care about one thing.
Yeah.
Okay.
Thank you. Thank you very much.
Any more questions for the night? Okay, again, I want to thank absolutely everyone for attending. I think so far out of the 2 sessions, everybody is warming up now, and we're starting to really get into some good information and understanding about money management and the credit process. As you know, tomorrow is investment night. So bring your questions. Each one of you needs to have at least one question to bring about investing, savings, Bitcoin, and all those others that, a little bit too much for me, but bring your questions about them. I'm sure Jasper can field them professionally. Again, my name is Charlotte Montgomery. I'm the program director, and I appreciate you all for coming. And again, congratulations to the winners of the books tonight. Have a wonderful, wonderful evening.